continue to hold the view that we discussed last time, which is properties being redefined by the nature of the cash flow attaching to it. So if you think about the conversation we've just had in regards to valuers being unsure about some asset classes and what those future cash flows are, there are other assets that have very, very long dated, beautiful escalating leases over long, long periods of time. And I think that we should now consider that to be prime property. So it doesn't need to be shiny glass on a Collins Street address for it to be absolute prime. It's really about the cash flow. And I think that a winning formula continues to be one where you can get hold of these long-term cash flows. They escalate at a level that outsurpasses CPI, and you take advantage of the fact that you're in a benign, if not decreasing discount rate, which should have a beneficial impact on the value of the property. So we continue to look for that type of security in our portfolio to the extent that we can find it, and really gives rise to how we think about property more generally. I think that in light of the current economic circumstances and pandemic circumstances we find ourselves, that the question is where's also the new asset classes that will come into be. And I think some of those are really around areas such as multifamily, the build-to-rent sector, seniors housing, social housing, where you've got issues of people with confidence and taking on mortgages, looking for still needing accommodation and new asset classes that will emerge as a result of that. And you've also got a situation where institutional capital would really look to redefine what they see as diversified tenancy risk and more certainty around individual cash flows. So there's some of the areas that, again, even wearing a debt hat, that Qualitas would be feeling very positive in terms of future opportunities.